Welcome to our channel where we discuss all things related to online investment and personal finance. Today, we're going to talk about why it's important to diversify your investments in order to maximize your gains. Let's define diversification first. Spreading your money throughout various investment categories is referred to as diversification in the area of investing. This can apply to financial instruments like stocks, bonds, real estate, and even speculative ones like cryptocurrencies. You may avoid, so to speak, putting all your eggs in one basket by diversifying. Instead, you are distributing the risk so that, even if one investment underperforms, the others will assist to offset the loss. Why, therefore, is diversification so crucial? One benefit is that it can shield you from market swings. For instance, the stock market can be quite erratic, with daily price increases and decreases. You can reduce your chance of losing all of your money if one stock declines by investing in a number of equities. Additionally, diversifying can help you achieve better returns on your investments. By investing in different types of assets, you can take advantage of different market conditions. For example, if the stock market is performing poorly, you may be able to make gains by investing in real estate or bonds. Additionally, diversification within asset classes is crucial. For instance, it's a good idea to invest in a variety of big and small businesses as well as businesses from various industries if you're buying stocks. In this manner, even if one industry is having difficulties, your other investments can still be doing well. Diversifying your investments can help you reduce the risk of losing all of your money if one of them performs poorly, but it does not ensure financial success. Additionally, it's crucial to keep in mind that diversification doesn't mean distributing your funds too thinly. Doing your homework and making investments in high-quality assets are still crucial. Another thing to keep in mind is that diversifying your investing portfolio is a continual process. To make sure that your portfolio still corresponds with your objectives, risk tolerance, and time horizon, you should periodically examine and modify your investments. In order to maximize your profits and shield yourself from market swings, it is essential to diversify your investments. You can reduce risk and increase profits by distributing your funds among various investment kinds. However, keep in mind that diversification does not ensure profits, so it is crucial to complete your homework and invest in high-quality assets. Thanks for watching, and don't forget to subscribe to our channel for more great content on online investment and personal finance. And as always, make sure to consult a financial advisor before making any investment decisions.